previous year in which the income is earned, the financial year immediately preceding the assessment year is called the previous year. Agricultural income is an income which is exempted from tax under section 10 subclause 1 as per the norms of Income Tax Act 1961. The same coffee seeds are ground, cured, roasted and ground by an Indian seller. So in that case 40% is business and 60% is agricultural income. Warm welcome to 5th Sem BCom student. The subject we're discussing Income Tax Law and Practice 1, the Unit 1 Basic Concepts of Income Tax. In our previous session, we came to know that what is income and what are the other concepts of income were there. The basic introduction concept was discussed in our previous sessions. In today's session, we're going to discuss about income under section 2 subclause 24 as per Income Tax Act of 1961 and assessee, assessment year, previous year. These concepts will be discussed and which is very important for your examination point of view for 2 marks questions. I am Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram First Grade College, Temple of Excellence, MYSURU. In our previous session, we have discussed about types of income. In the types of income, we have discussed that the types of income, we have 2 types of income. One, it was Indian income. The other one was foreign income. Income under section 2 subclause 24, heads of income and brief history of income tax India was the concept what we have discussed in our previous sessions. And in today's session, we're going to discuss charge of income tax under section 4, assessment year, section 2 subclause 9, previous year, under section 3. This is the only word which has been defined in the section 3 and remaining all the words are defined under section 2 and 2 subclause. Person under section 2 subclause 31, assessee under 2 subclause 7, agricultural income, what is mixed agricultural and business income concept which we are going to discuss in today's session. And for you people in the examination, it may be for 2 marks. Any one concept will be compulsorily for the examination. In this 5 topics, any 1 or 2 they'll be compulsory for your 2 marks question in the examinations. Go through this one and understand what we have here. The first one, charge of income tax under section 4. Tax cannot be levied. Levied means charged. Tax cannot be charged or collected in India except under the authority of law. They're saying that when tax has to be collected only through the part of tax norms and tax association, tax authorized things, whatever we have here as per Income Tax Act, and no other person are eligible to collect the tax without the authorization of the tax authorities, whatever we have here. As per Income Tax Act 1961, the authorization as given to the central government for charging the income tax, and this is the charging section in Income Tax Act 1961 which provides that, what is the thing it is giving? Tax shall be charged at the rates prescribed for the year by the Annual Finance Act. They're saying that when always the tax will be collected on the slab rates or the rates as per the rules what they made in the Finance Act. Like for example, finance budget which takes place in the month of February every year. Whatever the things they're going to decide in this finance budget, based on that the slab rates are fixed and they're going to charge tax on the income earned by an individual or a person. The charge is on every person specified under section 2 subclause 31. So in the upcoming session, we are going to discuss that one. What is section 2 subclause 31? They're saying that the people who have been mentioned under section 2 subclause 31, they are eligible and they're liable to pay the tax as per the Income Tax Act of 1961. Tax is chargeable on the total income. Whatever the income I've earned during previous year or during financial year, so that will be assessed and later the deduction, whatever or the benefits are there, it will be given, and whatever the amount remains on that total income earned by a person, they're going to levy the charge or they're going to levy taxes. and not the assessment year. There are certain exemptions provided by section 172, 174, 174A, 175 and 176. Certain exemptions are there. In that one, if any person has earned income, for that there will be no taxes will be levied, which will be discussed in the upcoming sessions. Tax shall be levied in accordance with the subject to the various provisions contained in the Act. They saying that one, based on the provisions and the rules and regulations as per the Income Tax Act, whatever we have here, based on that, the tax is going to be levied or charged on the income earned by a person. So far as it serves as the most operative provision of the Act, the tax liability of a person springs from this section. They're saying that one, the income charged by the tax authorities is based on the rates which has been finalized or approved in the budget every year in the month of February. So based on that, they're going to collect, and it is the concept what we have here, charge of income is the main backbone of the law and operative provisions which is supporting for the income tax authorities to collect the tax as per the present norms, whatever we have here. The next concept what we have here, assessment year under section 2 subclause 9. Assessment year is a year which is preceding to the financial year or previous year as per the Income Tax Act of 1961. Assessment year is a year where assessee's income is assessed for the payment of tax. Assessment means a period of 12 months commencing from 1st April of every year. The total income earned by the assessee during the previous year shall be chargeable to tax in the next year. Means they're saying that one, whatever the income I've earned during the previous year, that income will be assessed in the assessment year, and they're going to charge the tax on the person for earning such amount of income, which is termed as assessment year. For example, for the previous year 2023-24, the relevant assessment year shall be 2024-25. That is nothing but from 1st April 2024 to 31st March 2025 is the present assessment year for all the students, what they have to write in the Income Tax Act 1961. Previous year in which the income is earned, the financial year immediately preceding the assessment year is called the previous year. They're saying that one, previous year is a year where a person has earned the income, and it is nothing but it is a financial year previous to the assessment year 2024-25. That is nothing but 2023-24 is my present previous year, and this previous year commences from 1st April and ends on 31st March every year. So for us, the present previous year will be 1st April 2023 to 31st March 2024. This means that tax is levied on the income in the year in which it is earned, referred to as previous year, and the tax on such income will be paid in the assessment year. All the assessees are required to follow a uniform previous year, that is financial year, starting from 1st April ending on 31st March, already I said you people. And for us, the current previous year is 1st April 2023 to 31st March 2024. So remember thus, my assessment year is 2024-25. My previous year is 2023-24. You have to write in all the problems or wherever we are going to make calculation or computation of taxable income, we have to write the previous year as 2023-24, assessment as 2024-25. Person, according to Income Tax Act 1961, Section 2, Subclause 31, it defines any individual or a Hindu undivided family or a joint stock company or a company or a partnership firm, an association of person, body of individual, local authority, artificial judicial person. All these people are called as person as per Income Tax Act of 1961 under Section 2, Subclause 31, and it is compulsory question for 2 marks. Define person. So then I have to write person under section 2 subclause 31. Below that, an individual, HAF, a firm, a company, an association of person, body of individual, artificial judicial person, local authority. These are the things I have to mention under person under section 2 subclause 31, where we can score 2 marks easily, and it has to be written in this format. Assessee. Assessee is a person who pays the tax to the government as per the Income Tax Act of 1961. Assessee is a person by whom any tax or any sum of money is payable under this act. It also includes the following: every person in respect of whom any proceeding under this act has been taken for the assessment of his income. Even though I'm not earning any income here, income tax has assessed my income, and they're saying that when I have to pay the tax to the government, so then they're going to call me as a deemed assessee. Sir, when you're not earning any income, how the income tax can say that when you're the deemed assessee? So deemed assessee means here it is an assumed assessee here, where I'm not earning income directly, but I'm earning income indirectly. Like for example, someone has invested the amount in the name of Rajesh, and I'm receiving that amount as interest in my name, and it is taxable under the Income Tax Act, stating that when the amount whatever you received or where you have taken the responsibilities of through the power of attorney, taking care of the business or property, and if earning any amount, but you're not the right owner of the property or not right owner of the investment, but even though based on the power of attorney, you are receiving certain income on behalf of a third person. So then, as per the Income Tax Act 1961, a person who receives the amount, he will be called as a person under section 2 subclause 31 and is liable to pay the tax. Every person is deemed to be an assessee under any provisions of this act. Sometimes a person becomes assessable in respect of income. Some other person, they say, already said that one, it is not my income, but actually the income belongs to some other person, but that income I have received, or I'm taking care of those incomes in the concept of power of attorney, and it is taxable in the hands of the person who is taking care and responsible for all the things. Assessee under section 2 subclause 7, continuation. Every person who is deemed to be an assessee in default under any provisions of this act. For example, where a person making any payment to other person is liable to deduct tax at source. They're saying that when you're not the right person where you're earning the income here, but you have involved in the trading activities and where you're giving services, and the payment whatever they've made to you or the payment what you're going to make to them, you're deducting the tax and then you're paying the amount for them on behalf of a third party. So then automatically you're going to become assessee for the income tax authorities as per the Income Tax Act 1961 rules, whatever we have here. Agricultural income. Agricultural income is an income which is exempted from tax under section 10 subclause 1 as per the norms of Income Tax Act 1961. Any rent or revenue derived from the land in India which is used for agriculture purpose. So what is agricultural income? Means any rent or revenue which have received for the land in India which is used for agriculture purposes. And if it is used for non-agricultural purpose, then it is a taxable income. Any income derived from such land by agricultural operations, they're saying that one, if based on the agricultural operations, if you earn any income from such agricultural land, whatever the income you earn, that be treated as agricultural income and it is exempted from tax. Income attributable to a farmhouse subject to condition. They're saying that one, subject to certain conditions, the income whatever you earned in the farmhouse, it may be taxable in certain cases or it may be exempted in certain cases. Income derived from saplings or seedlings grown in a nursery. So they are saying that one, this can be treated as agricultural income, which has been like the seeds. From the help of seeds, we have grown the plants and it has been sold in the nursery, that we treat as agricultural income. And in agricultural concepts, certain things are there, mixed agriculture and business income. So what is that one? In some of the business, a certain part will be called as agricultural income and remaining part will be called as a business income. So those things we are going to discuss here. The first one, growing and manufacturing tea in India. So the tea crops, whatever we are growing in India, in that one, a part is called agriculture and remaining part is called business income. In that one, 40% is called as business income and 60% is called agricultural income. Agricultural income is exempted and this is taxable. Whatever the business income is here, that is taxable and agricultural part is exempted from tax. The next one, sale of latex based on brown crepe manufactured from field latex and obtained from rubber plants ground by a seller in India. They're saying that when any rubber is sold by a person through the cultivation and the thing which has been obtained from the rubber plants, whatever is selling. So in that one, 35% is treated as business income and 65% is treated as agricultural income, and this is exempted and this is taxable. Any sale of coffee ground and cured, I'm just curing that one and I'm selling that one. In that case, 25% is my business income, 75% is agricultural income. The same coffee seeds are ground, cured, roasted and ground by an Indian seller. So in that case, 40% is business and 60% is agricultural income. If I just cure that one, after growing that one, if I cure and sell, 25-75. If I change that one and roast that one and ground, means modifying the seeds here. So if I do that one, then automatically it's going to become 40% business income and 60% as agricultural income. Whatever the agricultural income is it, that is exempted from tax. In our upcoming session, we are going to discuss principles of taxation, main objective of income tax, features of income tax and provisions of Income Tax Act 1961, which is going to be very important for theory aspect questions. Thank you for all 5th Sem BCom students. In today's session, we discussed about charge of income under Section 2 subclause 24 and assessee, person, assessment year and previous year. Namaste to all 5th Sem BCom students.